Morning, guys. What's up? What's up? What's up? Sound check. Just making sure the sound is working. Are we good? By the way, I'm still in a long, just looking for this to get up to 89. Marius Mansonu, good stuff, broski. This is my current position at the moment. So just looking to get up to 18.689, and then just going to hold a run up beyond that. Just let it run. Could probably tighten up my stop now. Bum, 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 bum. So I've got music in my ears, guys. So there's no music today. Boo boo. Boo boo. Let me just do one. Let me just do one thing quickly. Spotify. So there you go. Let's just filled my TP. So I basically just got one Connie left now, just holding it. If anyone wants to listen to the same music that I have inside of my, I don't know what ears are in Italian yet, in my ears, then be my guest. It's there. That's the link. Questo la linka. Sorry guys, just trying to sort out my camera here. There you go. Wee, what's up guys? Morning Ainsley mate. Morning. So yeah, that's just basically got one runner left. Just gonna keep it tight. Let's have a look. So I'm going to keep it below my original low. So my stop is still below 49, just for continuation. Right, so let's break this down. By the way, this is my trade. Just for clarity, just so you guys know what I'm up to. So 18,656.50, right in on this low. Paid myself at 69. Took another two off here, and I've got one left. So this is off at 90. These are off at 69. Just got one left, just looking to hold a runner. I don't want to see it below this low. So that's currently the trade I'm in, which is in here. Traded this range here. And then this morning, I was on a con call. I took another trade this morning, but butchered it, which I'll talk you through. So this was my trade this morning, in at 20, which is a very low. Scaled out at 23, and then paid myself at 41. So let's break it down. So I've caught the entire range, but just butchered it, or butchered the initial entry. So for me, I'm anticipating higher prices. I'm looking for us to get back up inside this wick today. This is where I'm looking for us to get back up into, right? The very high of this mitigation block. I'm wanting the mitigation block to hold going into CPI tomorrow. All right, so this is currently where I'm looking for price to get up to, clear out these highs, take out this MIT. The very high of this MIT is where I'm looking for price to get up into today. So if we look at yesterday's daily plans, and guys, if you haven't grabbed your daily plans yet, you can get them for free inside Red Pill Trading. But this was yesterday, looking for price to get back up into the mitigation block at 18,712 on NQ. That was in the daily plans yesterday, which is essentially what we did right here. So we were trading this yesterday outside off the open, just trading up to the high 1712. This is where we terminated, and then we just had a bit of a wild PM session. I didn't trade that, I was done in the morning. So this is all going back up into the MIT block is what I'm trying to say to you. This is all going into the mitigation block. All right, what you need to be mindful is that this is a 3 drives. Okay, so you've got drive 1, drive 2, drive 3 into this mitigation block. So, and also into this order block. So this is, you got to be careful trying to trade through this. All right, but at the moment I am looking to do so because I am macro bullish until proven otherwise. All right. So at the moment, just holding runners to take out the high. So if I'm bullish, what I'm always looking to do is, especially during London, is I'm looking to sweep the Asia low into ideally a 15-minute order block, which is inside a discount, which formed inside of the previous day's PM. It's what I'm always looking to do. Okay, because this essentially becomes engineered liquidity. Price turtle suits that engineered liquidity into that higher time frame order block for continuation. So I'm always looking, when I'm looking for continuation, a 15-minute order block for price to dip into, for price to move higher. Always. It's like my go-to. Right? Sweep onto the Asia low into a 15-minute order block underneath engineered liquidity for continuation, right? Always looking to do that. So what do we have here? Engineered liquidity. So this is accumulation. This is A. This is your manipulation. M. And this is your distribution, right? A and D. So if this becomes my low, which I am anticipating price to respect underneath the Asia low. This is your Asia low right here. This low is your Asia low. So a purge on the Asia low into your 15-minute order block. I'm keying this as my higher time frame point of interest. So I'm not anticipating price to go below this low. So what we have here, when price distributes away, what is it now created? Engineered liquidity again. So as turtle suit traders, your job is to trade that very pivot low, which you could have done if you just took the 15-minute order block. Mean threshold, rejection block high. I personally didn't. I wasn't at my charts, right? But this now creates your valid manipulation. This is all your secondary entry. So what you're going to anticipate as primary entry traders, turtle suit traders, is offset accumulation. Always. So what we have here is an unmitigated range. So this valid manipulation is unmitigated, but we have engineered liquidity. So price now dips back into and takes out those who have chased price. Smart money accumulates those sell stops because they are buying those sells. Smart money buys the sells, or people getting offset and accumulating their stops. And price goes back to mitigate this range on the low, right? So this is mitigation. So there is your entry. Now, if you want to just purely use that on its own, fine. But you can overlay context on top of this. So, in terms of my models, guys, what model did we have on that low? In terms of my mechanical entry models? Anybody? So the way that I trade, I'm a turtle suit trader, okay, which has an element of discretionary to it. However, you can get incredibly mechanical with it by utilizing X levels, all right? Also, mechanical entries form context that you overlay on top of your turtle suit trades to support it for bias and for context, right? So what did we have in here in my models to support this mitigation? Anybody on YouTube? (15:1) exactly. So H1 to M5 model is completely readily available and free on YouTube. It's out there. I've done a video on it. H1 to M5 model absolutely slaps. But there are other time frames you can utilize it on, and a 15:1 is another one which I utilize. Okay, so what is a 15:1 model? A 15:1 model is exactly the same as your H1 to M5 model, albeit we're now on a lower time frame. So what we're looking to do, and let me just move this out of the way. Let me just move this out of the way. It should be an easier way just to clear drawings. They should sort that out, Trading View. Right? But with a 15:1 model, what you're looking to do, or see, is a sweep of liquidity. This is a sweep of liquidity into a higher time frame point of interest. As I've just mentioned, 15-minute order block underneath engineered liquidity, anticipating continuation. Then, once price has swept that liquidity, this is the very next step that has to take place. Price has to then close back above that sell side liquidity pool. It has to close above. Once it closes back above, you're then going to go to step 3, which is you're going to look for an inefficiently delivered 1-minute range that formed inside of that wick. So that high to this low, that is an inefficiently delivered range. Why is that an inefficiently delivered range? YouTube. And God, this is PhD level stuff, guys. PhD. Why is this inefficiently delivered? Embaude. Was not mitigated. Absolutely. Not mitigated. These are weak lows. Inefficiently delivered. So what you are looking to do, if you have an inefficiently delivered range inside of that 15-minute wick, you're going to measure that range and you're going to find your SIBI inside of a discount to frame your entry. Where is our SIBI? Right here. Okay, so why in God's name, ladies and gents, why in God's name do you think I went short there? Why do you think I went short here? Why do you think I'm still in this trade? Why? Right? Because of my models. Right? 15:1. So why is it called a 15:1, X? Because the context is framed on a 15-minute chart. However, you're entering on a 1-minute chart. And H1 to M5 is context formed on an hourly chart, but you're going to enter on a 5-minute chart. This is a 15:1 model. Context is framed on a 15, you're entering on a 1. 15-minute rejection block, sweeping this sell side liquidity into our higher time frame POI. right? This order block underneath engineered liquidity, closing back above sell side. Step 3, go to your 1 minute chart, because that's where we're looking to frame our entry. You're going to find a SIBI in an inefficiently delivered range. Boom! There is your entry. Combine it with an unmitigated range, and you can see how there are now levels to trading, right? Not just a pretty little 2022 model, right? Chill with me. So once we are in here, right, and we are now getting in sync with offset accumulation, and we are now playing cricket with the institutions, what are we now looking to do as traders of red pill? What are we looking to do? Ladies and gentlemen, what are we looking to do? What are we always looking to do? Oh, this is... What are we always looking to do, ladies and gents? Anybody? What are we looking to do? And by the way, if this takes out 49.75, it's going to take my runner out. Literally just a runner. Exactly. We are looking to take internal range to now drive out external range liquidity. Yeet. This is all external range. External, external, external. And why is this the case? Because, ladies and gents, this is where the smart money are accumulating their stocks. Here, shaking those out of the move. So if they now have a warehouse which is absolutely laden with buys, they've got to go and sell these somewhere. So what do they go and sell it to? They go and sell it to those stops. What stops? Buy stops, right? So when down here, they're accumulating sells, right? For people who are getting stopped out and they're buying, they are now distributing their sells and selling into people who are having to buy back, because futures is a one-on-one game. So you'll now take, this is why understanding the principles of internal range to external range liquidity is so fundamental to your knowledge. And the principles of how price moves and why. Because if you understand that, you understand the principles of a turtle suit, you understand the principles of offset accumulation, and you can start getting in sync with price. We haven't even touched on X levels. But they're now distributing. Okay, so boom, sold. What normally happens once they sell, they have a little bit of a pullback. Why are they doing that? Why are they doing this? Why do you get a pullback? Again, offset accumulation. People are chasing pullbacks. What do they have up here? There's stops. What are they creating? More buy stops, because they've got to buy back out of their sell. So, oh, this is perfect for who know what, Mr. Smart Institution. Boom, thank you very much. I'll sell into you, puppy. Oh, look at this little chaser. Oh, we'll sell into you, little puppy. Thank you very much. Oh, now we'll just fuck about here, because actually, we'll just engineer some more liquidity, because we really need to sell some, because we're getting to where we want to close out. Oh, we'll go sell into you. Oh, we'll go sell into you. Right? Meanwhile, just constantly moving price up into external range liquidity. So, understand internal to external range liquidity. Understand it. It's fundamental to trading. When I understood this, and I firmly understood it, it completely changes the way that you look at the charts and that you look at trading. You have to look at it at the viewpoint of who's holding the bag, where is the more likely draw on liquidity, who's currently holding the best position in the market. Because 9 times out of 10, the market is going to go and run them. So if you can now align yourself with context and everything else that we talk about inside Red Pill, which is, you know, which is vast, as you guys know, which I'm not going to go into detail on YouTube, then you can start layering up your probabilities. Right? Right. But let's touch on X levels quickly. Okay. So in here, this is a 1 minute dealing range. Okay. So this high, which put in this low, yeet skis, right? Which closed below that low. Well, actually that low. No, that low. So closed below that low. So this was your 1 minute dealing range. So when you break a 1 minute dealing range here, boom, what have you now got? This is now a break of structure, right? Okay, which validates an unmitigated range, I'll add. But the way that you utilize X levels is you always want to then know what's your next X level dealing range for price to move up into. And the way that we work inside of RP is 15 seconds, M1, M5, M15, H1, daily, weekly, monthly. That is it. No other time frames. Don't talk to me about 2 minute charts. Don't talk to me about 30-minute charts. Don't talk to me about 90-minute fucking trash cycles. Don't talk to me about H4 charts. No fucking interest. None. Zero. Zada. Fucking nothing to do with those time frames. These are your time frames as price expands. Trust me. Right? So if you then break and you're on an M1, you want to go and find your M5X. Okay, what the fuck are you talking about, X? X levels, dealing ranges, how you draw dealing ranges like a king. So this high, which put in this low, don't include dojis, never include dojis. This high, which put in this low, was your 5 minute dealing range. So, ladies and gents, you have now broken on the 1 minute. You now need to know where is price going after the 1. And guys, my trading is the best out there. There is nothing better. I'm telling you, after 1, M5. This is mechanical as it gets. So you've broken your 1, you're going, okay, where's my 5? Well, here's my 5. So how can I get in sync with that? X? Well, you're going to look for your entry model on the low as long as this is your valid higher time frame POI. And you're going to trade up to that M5 premium. And this is where you're going to pay yourself. Right in here, above engineered liquidity. Now, there's other reasons why you can utilize this to frame entries long. Again, not going to go into that on YouTube. But this is where you would pay yourself. After the 5, where do you go? Oh, funny that, 15. So where is the 15? Well, the 15 is the same as the 5, right? The 15 is the same as the 5. So these two are exactly the same. So what you'd be looking for is to take price above that liquidity pool. So this is your M5 and M15 liquidity pool right here. Bosh, thank you. So now you're inside of a going into beyond the M15 into an H1. So this is where you need to know, okay, as price is now expanding, it's now going back through the dealing ranges, taking liquidity, going from a higher time frame point of interest, lower time frame entry, then expanding back out through the ranges and taking higher time frame liquidity. So when price is expanding aggressively, it's taking these highs, M1, M5, M15, H1, as it clears the liquidity and the inefficiencies as it goes. So what you then need to know is, okay, so where is the H1 dealing range? Your H1 dealing range is still this DR formed from yesterday, right here. Okay, so what has price ultimately gone up into? So why in God's name do you think I've paid myself in here? Right? So if we just look at my trade, which I'm still running. So in here at 56, paid out at 89. Why in God's name would I pay myself at 89? Why? Why would I do that? Why would I do that? Anybody? Why would I do that? Why would I do that? By the way, guys, you're getting a free session on me today. Whether I'll do it again, who knows? Why? Anybody? Morning, Debbie. Why would I pay myself here? Am I talking to myself today? Am I talking to myself? Anybody? Someone must know. Oh, thank you, Ainsley. Jesus Christ. It's painful sometimes. It's painful. Exactly that. High time frame premium. Back up into X levels on the high. Right here. Boom. Boom. So, this high is now inside of a higher time frame premium. What is price doing and where do you want to frame your entries? At higher time frame points of interest. Higher time frame points of interest. This is a higher time frame point of interest. Hourly discount. M15 order block underneath engineered liquidity, anticipating price to go and move back up into an hourly premium. X levels. Right? What is price doing? It's moving from a premium to a discount, searching for inefficiencies in liquidity and price. What is that? Internal to external range liquidity. Sell stops, buy stops, inefficiently delivered ranges where price has only been offered in one direction. Right? It's not difficult. Once you understand it, it's not difficult. Right? Your job as a trader is to wait, and there's ways that you can develop this and how you can know how price is going to do this. We develop and teach that all inside of Red Pill Uni. I'm not going to go into that in detail here. But you are looking to get to your higher time frame point of interest. And I call this a nucleus. And that higher time frame point of interest is where you're looking to frame your entries on your 15 seconds. You are then looking for this to break. Now, once it breaks, she's off, right? You're now looking for it to expand. As long as it's a valid higher time frame POY, you have the context, you have everything that we talk about in Red Pill. Before this and this, then it validates this to be higher probability. All right, and now you're looking for your nucleus to then expand out, break your 15, break your M1, break your M5, break your M15, break your H1, break your daily, and so on and so forth. All right, as price is now expanding back out. right? So the way that I draw it is like this, right? As it expands back out. Your job is to wait for price to get down to its nucleus at its high time frame POI, and then expand out as you go back through the ranges, right? Which is exactly what we have just done here. Exactly what we have just done here. Like to an absolute T. Like there's no if, buts, or maybes. It's exactly what we have done. Right? So this entry on the very low is going in on my 15-to-1 model after the one break, going into the M5X levels fair value, anticipating offset accumulation, accumulating buy stops to then mitigate this inefficiently delivered range, to then go and drive up into your M5X levels using this same principle. After the M5, we're going to look to the M15 liquidity. It breaks the M15, anticipates some form of offset accumulation again. If it's bullish, red pillars will know what to do, to then take price up into ultimately the H1 to M5 model. The H1 premium, which is the trade I'm still currently in, right? This 56 up to 89 is where I paid myself, right? So basically continuing the trade that I was on, that I was in from here. So in, scaled, back in, scaled. So I've caught this entire range using those principles of anticipating price expansion as it goes back through the dealing ranges from a higher time frame nucleus, point of interest, right? Discount, premium, X levels, right? So at the moment, I'm just still holding this position. Let's have a look. I don't want to see ES through 77. It's currently where I'm at the moment. So just having a quick look at this price action. So we have a bit of both going on. And by the way, yesterday, you guys need to, if you haven't already, you need to study. You need to study the 3 drives model, because yesterday my entire trading was based off my 3 drives, and I'll go into today's context in a minute. But this right here is my 3 drives model. Okay, and so a valid 3 drives forms inside of a higher time frame order block. That's how you depict a higher time frame, high probability 3 drives. If you do not know what a 3 drives is, I've done a YouTube on it, on an episode on it on YouTube. I highly suggest you watch it, guys. I highly suggest you watch it, because it would have, you know, it's essentially our entire trades yesterday were based off that, right? So this yesterday, so 17 scaled up all the way up to 711, over 100 points, was based on this alone. So what made this 3 drives high probability? Well, it formed inside of this higher time frame order block right here. It formed inside this green candle, which is inside this order block. So this 3 drives formed inside of a higher time frame order block, which validates it. Also, if it forms inside of a discount, that is high probability. You are looking to enter on the lowest down close candle on drive 2. It's a hidden order block. And what a 3 drives is, it's a accumulation of long positions by institutions. That's what it is. It's like the market tipping its hat to the institutions, like, oh, hey guys, we're in here. So price comes back to it. That's where you enter. If you miss the initial entry, you go off the order block out the back end, or the same entry off the lowest down close candle of drive 2, or the order block out the back end. Those are your entries if you're trading the actual 3 drives. But you anticipate price to come back to it, offset, accumulate. There's your entry. So what you do not do with the 3 drives is ever trade through it. You trade with it. And so our trades yesterday, all of our trades were in here, trading out, same principle, internal range, external range liquidity, right? All the way up to our high, which we noted inside of the daily plans, which, guys, is free. If you want the daily plans every day, they're free. You can grab them on WAP. So our daily plan yesterday was to get up to 18,712, which is right in here. We pretty much top tick the high, using the principles of 3 drives to get us up into this mitigation block. The lowest down, this wick is essentially what I was looking at, which is the upper quad of this H1 SIBI. Right, boom, traded off that 3 drives. So this morning, what we have on this low, we also have another 3 drives. So I am conscious of that, which is right in here. Drive 1, drive 2, drive 3. This candle. So that's just taking out my stop on my runner there. So price can come all the way back down into here and move higher again. I'm just going to look at MIT 62 here. Let's get rid of this for a second. So mitigation 62 would take it to 38.25. Oh, no. I'm just going to sit patient. I'm not going to trade this. I'm just going to sit patient. So there's 3 drives on this low. Why is this high probability? It formed inside this order block, right? Also inside this rejection block, inside of a discount, which validates this as a high probability 3 drives. Okay, so what you want to be mindful is I definitely personally do not want to trade through this. No chance but I trade through that. If price trades through this, okay, this is invalid, right? But what I'd want to do is trade in alignment with this versus trying to trade against it. So today, my objective is to get price back above these highs up here. All right, what I'm mindful of is this SIBI. So this SIBI is now acting as resistance, supported by this mitigation block. And so once price respects it and breaks, you now want it to, if you're short, you now want it to respect the lower quads of this SIBI as price moves lower. So at the moment, that would be your mitigation 62 entry. Red pillars. So just throwing myself. What was I talking about? Yeah, if you're bearish, you'd be looking for this to hold this high. I don't anticipate that high to hold personally at this stage. So I'm looking for price to get back up into this wick today, which would be the very high of the H1 MIT block, which is inside the daily plans. Which is currently what I want to see it do, right up into here. So today I'm actually anticipating, I said an inside day, I've completely ignored that candle. I'll get rid of that. I do not anticipate an inside day. For some reason I was looking at this candle. Yeah, so I'm looking for price to get back up into this high. So again, coming back down into a discount. So this is almost essentially a higher time frame search and destroy. Let's have a look at the 15. Let's clear up these charts. Downside of teaching. Sorry guys. Flaring. Okay, so our 15-minute DR is this low. Let's get rid of this. Is here. So this low, it's put in that high. It's currently our 15-minute deal. Yeah. So mitigation 62 is when you have mitigated on the low and you're taking the low to the high. It's very different to X levels, but that would be on mit 62, right on that low, so 38. So you could have scalped that if you wanted to scalp it. Beating my dad whoosh. Right, I'm just gonna do just got to do a little bit of analysis myself, guys. One sec. Yeah, so that was a. Yeah, you can hear me now. Yeah, you should be able to hear me now, Axe. Sorry, guys, admin. Did that make sense to everybody? Everybody understand what we were going through this morning? 1 second there. 1 second, Joe. 1 second, Joe. This high has to hold. If you want in lower prices, this high where we are right now has to hold. Yeah, so mitigation 62. Mitigation validates your 62. Price has no reason to come back and mitigate that range. All right, so right in here, you've now got your mitigation block. So if you're bullish, you'd be trading off this. If you're bearish, you'd be looking to get through that. So that you also got the you got the Exicorn, not the Exicorn, the Unicorn, which would be a breaker block with a Sibby, a Bissy, sorry, but a what the fuck do they call them? What, a Miticorn, which is essentially a mitigation block with the same principle. So if you're bullish, you'd be trading off this to go for continuation. 12 minutes left on this hourly candle. Again, X levels. Moving from a premium back down to an X levels discount. Where you do not enter, ever, is in here. Ever. Don't ever do it. Don't do it. Your liquidity. Little tip for you. Is it another, right? Daily plan within the link. I'm pretty sure it's in there. Is it another 15 to 1 just below? No. So if you're looking down here, in here, like it hasn't, this hasn't swept any liquidity. This is just a pullback. This hasn't swept anything. Like there's no sweep. Chill with me. It's got a sweep. Need a sweep into a high time frame POI for a valid. There's your sweep right here. Bosh. Into your higher time frame POI. Boom. Then it closes above. By the way, if just a little FYI, if it does not close back above, so for example, if this candle moved down but then stayed lower, you'd have to wait for the next candle to then close above. At which point you'd then use the same principle on that wick. It has to close above. If it does not close above, you do not do it. Okay? You do not do it. Just don't do it to yourself. Don't do it to yourself, Timmy. Anybody go off? Anyone go long off MIT 62? I've already taken my trades this for London, so I'm currently sat chill. Anybody? Maybe not, as the last dip was not as sweet. Oh yeah, you answered your own question. Sorry, Joe, missed that. If anyone's got any questions, feel free to reach out and ask me. You're more than welcome to. Oh. You took a short mitigation from a scalp on the top. Oh, good stuff. Nice one there, fam. If anybody is Italian who drops onto this stream, hit me up. I'm looking to get someone to speak to in Italian. I just want to parlay with someone in Italian. So if anyone can speak Italian, let me know. I'm currently learning Italian, and I'd like to speak to somebody in Italian. So I'll just throw that out there. If anyone knows any, if anyone sees, or anyone is Italian, let me know. And if anyone watches this stream at another later date and is Italian, feel free to reach out. Prego. Si, senor. My Italian so far is pretty much on the same par. So it's not like I can laugh at you all. Dove la banca è una piazza italiana, por favore. It's about what you're getting. Tu vai franco. Tu dove sei? Tu sei Cyprus, vero? Yeah, no. Fluent. I'm with Debbie thinking the M1 Bissy is juicy as it is at also H1 discount 50% of the Bissy for this one here. You got to be mindful that it's a this is a MIT block. But yeah, it could do. We can come back down into that for sure. Let's have a quick look at if you also look at yeah, there's no it's also BPR. It's also balanced price range as well, so you wouldn't really want to see price below this low. Bum. ES has to hold. It has to hold 78, 75 for lower prices. It has to hold that high. If you're anticipating a continuation, it has to hold that high. So what I'm mindful of at the moment is this 3 drivers on the low. But I'm also mindful at the moment that we also have this wider divergence, which is down at 582. So at the moment, I'm just wanting to see how it respects this 3 drives. If we start carving through this low, my draw will come down towards 79. Which would take us back out of this 79, which would take us to so ES has still got some way to catch up with their NQ on that same PDO, which is that one there. So I'm anticipating NQ to take out this low. So that'll be your scalp on this low. If you're short, wait, and you're short until ES takes out 78. Bum, bum, oh, baby. So that high there at 78.75 has to hold on ES for NQ to break this low. If you're bullish, you're wanting ES to go and drive out the high from where we currently are. Yeah, exactly, Joe. We did, mate. This is exactly sort of a threatening part of my bias this morning for my long. So at the moment, I just want to see how price respects this when we get back down to it. All right. So if you're short, you're short. If basically what I'm trying to say is this low to this high was your mid 62. So if you took this was a scalp. All right. At the moment, you're stuck in between the two X levels on that hourly, which is Chopsville, which is not where you want to be. If you're anticipating lower prices, you do not want to see ES above this high for continuation. All right, to take out this MIT and stab deeper back down into this again, this inefficiently delivered range. So what I'm looking for is whether this holds for continuation or whether it wants to drive through it. If it drives through it, price is going to go and work down towards this inefficiency down here, or this divergence, which is down at 81. So my trade this morning was simply capitalizing on this. From price going back from a discount to a premium. What you want to be mindful here, right, is this is your purge on the Asia low. Displacement. We are now back inside the discount of the London DR. So if price is going to move higher and you're anticipating a higher price, you'd anticipate it to go higher outside of the London dealing range discount. So again, so I personally went short, just taken one off there. Be very, very careful longing. So final's going to be 16. Took it off there. That was my little trade there. So I basically shorted on the basis of ES, not wanting to see ES through that high. Right, it's just a little 20-point scalp. So as I mentioned, if you're bearish, you don't want to see ES through this high. Key moment here. So I terminated my short there. Try a little long here, see if I can get it back up to 37. Basically playing with profits here, stops below that low. That took me out. Right, so that's my quota for London. So just go through my London trades. So these are my last two. So shorted 39 down to 29.20, and then just took a bounce here to try and take it back up to 37. Stopped me out on that one there. And that's my morning trade. And then that was my other trade as well. So Caught this range this morning. This range, and then just took a little loss on that one there. So that's going to be me for London. If anyone wants to go over anything specific, let me know. We can do. We broke down all of yesterday's price action. We've broken down today's longs, our reasons why. So now we've broken through this 3 drives here. I'll be very, very careful with these lows here. I'll be anticipating price want to go and search for this inefficiency on this low. Which, if you mentioned, I said if it's going to go break that 3 drives, that'll be your next target. Which is down at 81. So for me, for higher prices for today, for price to get up to the very high of this MIP block, right? So into the mean threshold of this wick. We have to, this isn't the MIP, but I'm looking for it to get into mean threshold of this wick, which is the high of the MIP block. It has to hold this low from yesterday, which is this low. It has to hold that. If we break that, game over. Good night, Vienna, as they say. Oh, no. So patience, patience, patience. So the only thing which I haven't, for me, which to support is that this this range on this low is currently unmitigated. This range in here. So I wouldn't want to go long again until it takes out that low. I've also got to be mindful that price has gone back up into that MIP. On the hourly. So again, that's delayed SMT up on this high, with ES going up for this little div on the high. Thing is, if you're bearish, so now if you're bearish, you've got this 3 drives on the high, right? Into this higher time frame order block. So if you're a short, you'd be shorting off this order block, looking for aggressive displacement. So at the moment, if I'm going to re-enter, I need to seek more confirmation from the market. Two seconds, guys. Nip to the toilet. What's up, guys? I'm personally just waiting now. So I've personally taken my London trades this morning, so I'm just going to wait to see where we are closer to the open. Let's just do a quick little analysis of where we are. So same thing for me today. I don't want to see price through this low for higher prices. I'm mindful that we got 3 drives on this high. So basically, I'm looking for the market to provide me a lower risk entry if I'm going to trade along. Like if I'm going to trade along again, I want to be right down at the low. Right back down inside this unmitigated range. I don't particularly want to be trading in here long again, with the potential for this to be a valid 3 drives on the high. So for me, for high prices, this low has to hold, but if you're short, this high has to hold. And I've got arguments for both at the moment. So my trades this morning was simply just taking price from a discount back up into a premium. Held a runner, take out the high, got stopped on my runner. So now we're just in no man's land. You know, just consolidating at these higher time frame lows, which isn't really anywhere that I particularly want to be re-entering, especially as we've now taken out this low, which are 3 drives. So I basically want to see if price is super heavy, which should indicate that this is 3 drives, and then look for continuation, or look to see where we are at the open, see if we can bounce this low versus just trading in here. So the reason why I've got arguments for both. So look. So ES has gone through this. Has gone through this mitigation block, whereas NQ hasn't yet. It's just tipped it. So I want to see if NQ gets back up into here today for for a potential short. But if we go through this low, it's going to allow ES to go and work down towards the RTH gap on the 12th. It's all the way down here. I'm just mindful that it's a Tuesday with no news. M5 continuation. The thing is, what's the conditions for an M5 continuation, Joe? If you're going to trade an M5 continuation, what's the conditions for that? What conditions do you need for a valid M5 continuation? Right, what context though? What context are we talking about? What would make me hesitant on trading an M5 continuation? Yeah, but what else? You need a catalyst, right? You need a catalyst. So if price is going to distribute aggressively, right? You need the catalyst to do that. So whether that's exactly news. So we are a Tuesday with no news. So we don't have the volatility to do that. It can do that, but the context would precedes price. So I would not trade that. If you are trading around the open or a news event and you have context for price to drive lower prices, then sure, that's when you have your M5 continuation models. You actually had an M5 in here. Just want the market to present another opportunity. A plus only. So this hourly high for me is sus. And the reason why it's sus is because it's got no tail. And when a candle has no tail, it only does that if price is extremely bearish or bullish, depending on which side there is no tail. So it would only do that if you're anticipating hella aggressive displacement. It leaves price like that. Essentially, the candle has literally just opened and dumped. There's no power of 3 in it whatsoever. So whenever I see candles like that, and we are not in the conditions for a super aggressive displacement, they become a drawn liquidity. So what I'm half anticipating is them to pull us back up into this range, but I personally don't want to trade it. I'm just waiting for the market to tip its hand, basically. That was my trade this morning. Clean, simple, model, turtle suit. 15-minute order block, high time frame discount, offset accumulation, unmitigated range, Earl. That's the kind of stuff you're looking for, this stuff. Right? You don't want to be trying to second guess a trade in here. Like, this is trash. So yes, if price is hella aggressive, so it will go out of a discount. However, for me, we don't have the conditions for that. We don't have the context for it. So as always, context before time, context before price. Context would keep me out wanting to trade this aggressively short. It can do it, but context would keep me out of it. And I'm completely okay with that. Basically, what I'm saying is I wouldn't want to be entering short in a higher time frame discount on a Tuesday with no news. No, thank you. Okay, NDX had a wild Tuesday. So we've got SMT tag with Nasdaq divergence. Remember how I said this high was sus? So close to taking that low. Eesh. Yeah, 50-minute IB. Just looking at ES. ES has just played catch up on that 15-minute order block. Gone back and mitigated that range. Essentially what it did on that low. Six sister on the low. Saw it a bit late. ES just suiting the low. Little shake out. Little shake and bake. Can't chase it. Don't want to short it. But these highs here are now suspect as they formed inside the 262s on the hourly. So certainly wouldn't want to be going short. Right, guys, I'm gonna call this London session here. I'm not looking to trade again until the open. There's nothing which I particularly want to trade or like, so I'm just gonna come back closer to the open around 8:30, 9 o'clock. So if you're not inside Red Pill, I will see you later on. I'm gonna go get a little bite to eat and chill out for a bit. There's nothing in here that I particularly want to trade. I've already taken my trade this morning during London. So right now I'm just going to sit still and wait to see where we are close to the open. All right, guys, so I will catch you all later. Take it easy. Abosh.